Hey guys, what's up? Alec back with the daily stock market. And today we're going to be talking about a great video. We're going to be comparing two huge beverage companies against each other. And one's going to be Coca-Cola and the other one's going to be Pepsi-Cola. So if you are a long-term holder, you are a fan of Coca-Cola, you want a good dividend stock, you hear this entire video out to see who's the winner. Is it going to be Coca-Cola or Pepsi? And which one's a better buy right now? Okay, so the first one we're going to be talking about is Coca-Cola, ticker symbol KO. And if you look at the one-year chart, they're down 16% in the last year. And in the last 5 years, they're up about 15%. Now, I actually personally own some of this stock. You'll actually see I own $500 worth. They have a 52-week high of 60. They have a 52-week low of 36. They're currently at 49 on their share price. They have a market cap of $200 billion and a PE ratio of 25 with a dividend of a 3.5. So those are some pretty good stats. They also have employees, about 86,000 employees. Now, if we look at Pepsi employees, they have about 250,000 employees. And if we look at some of the other stats, the PE ratio is 27, just the same. Dividend is 2.9, so it's a little bit less. Their 52-week low is 100. 52-week high is 148, so they are closer to their 52-week high, and their market cap is 191 billion. Now look at the volume is only 3 million, so a lot less people are trading Pepsi right now than they are trading Coke. If we look at their 1-year graph, they look actually very similar. They're actually both looking like they're being set up for a swing trade right now. And the good thing about Pepsi is they're actually showing some confirmation, some positive confirmation here that they're coming back up. So Pepsi looks like a great swing trade and Coke looks like a great swing trade also. Their 1-year charts, their support and resistance are looking very similar. Just by looking at their stats, they look pretty neck and neck, but let's dive into their financials, their balance sheet and income statements to see which one's superior. Now, I do want to compare them against one more beverage company, and that's going to be ticker symbol FIZZ, National Beverage. And this is a company that I have made a lot of money off of in the past before. They raised about 100% last 3 months. So you might want to have your eye on National Beverage too. They only have a $5 billion market cap, so they're a lot smaller of a company. Still a big company, so they can have a lot of room to grow too. And if you ever heard of like LaCroix, that's what their big thing is. They do a lot of different stuff like Faygo and LaCroix and a bunch of other stuff too, but LaCroix is their big one. And their 52-week low was 35. And I was buying right around like 40 and 35. If you can kind of see some of my history in the past, like I sold them at 12 shares for $40 in the past. And if you kind of look right now, you'll actually see they're $110. This is definitely a company you don't want to be sleeping on, especially they had a big spike recently all the way up to $181. So it's definitely possible why they can get back there. You might want to read up a little bit more in this company too if you are interested. Okay, so the first one we have pulled up is going to be Coca-Cola. And if we look at their net income, they were $7 billion in 2015, $6 billion, $4 billion, $6 billion, and then they went up 38% in 2019 to $8.9 billion. Now, if we look at their revenue, they have actually been losing revenue consistently since 2015, which is bad. It's a red flag. We'll see if Pepsi does a little bit better on the revenue. About 40,000. If we look at their 2020 revenue, though, which we can kind of take a peek at right here, just in Q3 2020, they did $8.6 billion in revenue, and their net income was $1.7 billion, which is down 32% year over year. So keep in mind their total revenue is down from last year, and their net income is down from last year too. If we take a look at their balance sheet, it's not the best thing in the world. They have 75% assets to liabilities. Now, a good thing I see is their cash and cash equivalents is up 51% year over year to $11 billion, which is a really great thing. Their total current assets are up 31% to $30 billion. And if we keep scrolling down, their total assets are up 11% to $97 billion. And if we look at their liabilities, other current liabilities is down 25%, which is a great thing. And their total current liabilities is up 7%, which is a bad thing. Their long-term debt is up 27%, which is another bad thing. So their balance sheet doesn't look like it's the best in the world. It's improving a little bit in 2020. And their net income isn't the best thing in the world either. Their total revenue is not the best thing in the world. So let's see how Pepsi actually compares, and then we'll actually pull up Fizz as the last one too. And this is pretty cool if you scroll down here and look at the peer comparison, non-alcoholic beverages. So EPS, it's ranking pretty good. The PE ratio, it's 4th, so it has a really good PE ratio, really good EPS. The debt to asset, though, is 13, which is really not good. And the dividends is one of the best compared to its peers. It's ranking number 3. Okay, so now we have the net income pulled up for Pepsi, and it looks like they were doing really good 2016, 2017, and then 2018 they had $12 billion in net income, 69% growth, which is way better than Coca-Cola, but then they went back down to $7 billion in net income. So Pepsi is already beating them for net income. Now, if we look at total revenue, we can actually see that Pepsi is better at total revenue too. So this is very important, guys. Total revenue, Pepsi is the winner. Net income, Pepsi's the winner. Income statement in general, Pepsi's the winner. We can see them doing more revenue and more consistent growth in revenue, where Coca-Cola went down in like 2017. They had a misstep. It looks like Pepsi is very consistent with their revenue. Now, if we click in to 2020 and actually see how they're doing, they're up 5% too. They're doing even better this year. $18 billion in total revenue just last quarter for Pepsi. That's absolutely huge. Now, if we go to net income, look at their net income. It's better than Coca-Cola. Coca-Cola was what, like $1.7 billion? What you'll see here is Pepsi's net income is up 9.3%, and it's $2 billion in Q3 of 2020. So overall, Pepsi's the better company when you look at financials, when you look at revenue and steady revenue and their net income. Now, if we go down and look at their balance sheet, now, in my opinion, they both probably don't have good balance sheets. They can probably be better. At least their liabilities aren't higher than their assets. But if we click into it and look, their cash and cash equivalents is up more than Coke. Remember, Coke was only up 50%. What we see here is Pepsi is actually up 65%, and their short-term investments are up 112%. Account receivables are up. Inventories is up. Total current assets is up. Long-term investments is up. Goodwill is up, even though goodwill is the least important thing on the whole balance sheet. Their total assets are up 18% to $92 billion. So if we go back to the bar graph, it says $78 billion for their total assets, but in 2020, they reported as $90 billion on total assets. Now, if we look at their total liabilities, that's up too, though, 24% up, which is a lot for total liabilities. So they're at $78 billion. So that little pink bar says 68, should say $78 billion. They grew their total liabilities and their total assets, which is not the best thing in the world to see those total liabilities up 24%. So overall, their balance sheets are both pretty poor, but I am going to claim that Pepsi is the winner between Coca-Cola and Pepsi, but the video is not over yet. We still have the smaller underdog to see if they can do anything at all. So what you'll see is their net income is very small, only $100 million, which is, I actually don't like that at all. But look at how much they were gaining by. In 2016, it was $61 million, and then it was up to $170 million. So that is 74% growth on the bottom line. And this is for ticker symbol FIZZ, by the way, National Beverage, LaCroix. Now look at that total revenue, though. The total revenue looks pretty good, especially the growth. In 2016, 9%, 17% growth, 18% growth. You know, you'll see Pepsi and Coke didn't have revenue growth like that. Now, they became a little bit stagnant, though, for the last 3 years. They haven't had much growth in their total revenue, which definitely concerns me. We don't have to really go into their whole income statement and see everything. But if you look at their revenues is up 8%. Their net income is up actually 44%. To see that they're actually growing revenues and their net income by 44% in 2020. Now, if we scroll down here, this is where they really shine. You'll actually see their balance sheet is amazing. They only have a 30% assets to liabilities, and they have $648 million in their assets and only $196 million in their liabilities. So they actually have about 3 times as much assets than they do liabilities. Now, if we click in and see what's going on, their cash and cash equivalents is up 73%. From that, their total current assets is up 47%, which is amazing. And their total assets is actually now $751 million. So it's not 648 like it says there, it's 751 million currently. And if we look at their liabilities, which let me take a look at that, total liabilities is up 15%, 191 million. So they're basically their liabilities stayed the same and they grew their assets even more. So they probably have 3.5 times as much assets than they do liabilities, which if Coke and Pepsi had a balance sheet like this, I would put so much money into them because you know that it's a company that's not really going to fold. And this is why you actually see this company has gained 100 and something percent in the last 3 months is because they're growing revenues, they're growing net income, they have an excellent balance sheet, they have a lot of cash on hand, so they can spend that cash on awesome things. Like if you look at their operating income, their investing, cash flow, and financing, it's all going to the right things right now. So I challenge you to find the smaller guys sometimes. This is still a huge company, don't get me wrong, but like Beyond Meat and plant-based food, try to find a smaller company like Tattooed Chef, for example, that can actually have more growth and more room to grow, and it's not already capped out like Coca-Cola and Pepsi. Overall, I like Pepsi. They are both great buys right now, but Coke might be a better buy right now because it's further away from the 52-week high, so it's at a little bit more bottom of a support. Pepsi is still a great buy, but you might want to wait for Pepsi to dip a little bit more, right? So if we pull up their chart here, they're at a good support right now too, but maybe if they can get down to like 130 would be a little bit more attractive in my opinion for Pepsi. But overall, I really like both of these. I think they're both currently a buy, and Pepsi is a great company overall. Coke might be a little bit better of a deal right now. Pepsi might be better around 130, but either way, if you're buying for long term and you're going to hold for 6 months or even a year, I think that these are both great sound decisions. And I'm going to be personally diversifying a little bit more into Pepsi because I already have $500 or so into Coke. So I'll get some into Pepsi, maybe like $500-600 for long term, and hold it there for about 1 to 2 years in Pepsi. Pepsi is the winner. I hope you guys did like that video. And if you want more videos where I compare 2 or 3 companies against each other, comment below what 2 companies you want me to compare against each other. Now, I am up about $8,700 in the last 3 months. If your guys' chart doesn't look like this and you need a little bit of help actually taking the next step into stock market investing, and if you want to get serious in the stock market in 2021, reach out to me on Instagram. I have a great group on Instagram. Just shoot me a DM, and if you want to actually see some testimonials of clients, click success number 1. This is actually real testimonials from over 100 different clients, and I filled up this highlight. We've actually had so many positive reviews. I had to make a second one called success number 2 over here on the left. These ones are more recent. You'll see it's from a week ago. So if you want to read some more recent ones and some real people, go ahead and go to my page, read some of these, and I'll actually shoot you over my application for the program, and then I'll actually shoot you over my website after that, so you guys can check out my website, what I have to offer, what we're going to be learning from the program, and everything too. Share this video with a friend, guys. Make sure you are subscribed. Like the video. YouTube is the place where you can find all my full-length videos, and I will see you guys in the next video. Remember, don't time the market, buy the market. Peace.